No oil, no cars, chaos everywhere. On October 1973, a group of countries made a decision that would change the world forever. The members of OPEC, the Organization of Petroleum Exporting Countries, decided to turn off the taps to the United States, Canada, the UK, Western Europe, and Japan. They stopped selling oil to these nations. And at first, the embargo seemed to be working. The US went from this to this in just a few months. Their economy was in sharp decline. But then something strange began to happen. The price of oil kept rising. It didn't drop. It actually went up and up and up. By the end of 1974, oil prices had quadrupled. People were queuing up at gas stations, not knowing if they'd get fuel or not. The economy was collapsing. But as the year wore on, something even stranger happened. The economy didn't recover. In fact, the economy continued growing. People still had jobs. Factories weren't closing down. The stock market was going up, but the price of everything was going up even faster. Food prices rose by 20%. Car prices rose by 30%. Housing costs rose by 20%. And with wages lagging behind, living standards fell for the first time in decades. It was an economic disaster. And the worst part was that there was nothing anyone could do about it. That was the birth of stagflation, a term coined to describe this strange set of circumstances where an economy is stagnating but inflation is skyrocketing. In some ways, it was the worst of times. Unemployment was high, economic growth was low, living standards fell. But in other ways, it was the best of times because while unemployment was high, people still had jobs. While the economy was stagnant, it wasn't in a recession. And while living standards fell, no one was living in poverty. So what happened? Why did this weird mix of stagnation and inflation occur? How did it affect the world? And how has it shaped our world today? Let's find out. In the early 1970s, the world was dominated by two superpowers, the United States and the Soviet Union. Both superpowers spent vast sums of money on their militaries. Both superpowers wanted to win the space race. And both superpowers needed oil to keep their economies running. The United States imported most of its oil. Meanwhile, the Soviet Union had lots of oil, but their domestic demand for oil was growing fast. To make things worse, the weather was unusually cold. Many parts of the world experienced particularly harsh winters. Europeans cranked up their heating systems. Americans turned up their thermostats. Industrial processes used more energy. Demand for oil was rising fast, and the Soviets couldn't produce enough. So they turned to the only place they could, the Middle East. The Arab nations there had lots of oil, but they sold it to everyone, including the Americans and the Europeans. However, the Arab nations felt that they weren't getting a fair deal. They were selling their precious oil for too cheap. In fact, they had never been paid fairly for all the havoc they caused. For example, every time there was a war in the region, oil prices would rise dramatically. The Yom Kippur War had broken out in 1973, and oil prices had already risen by 30%. But the Arab nations wanted more control over the price of oil. They wanted a higher return on their product. And so they joined forces to create OPEC, the Organization of Petroleum Exporting Countries. Together, they controlled a cartel, and cartels can raise prices. Now that they were united, the Arabs gave the West an ultimatum. Either give us a bigger slice of the profits, or we will cut off the oil supply. The US refused, so OPEC cut off the oil supply. As soon as OPEC announced their decision, the US went into action. They built up their strategic petroleum reserves and imposed price controls. These measures stabilized prices in the short run, but they couldn't last forever. Eventually, the US ran out of oil and chaos ensued. At first, it looked like a normal recession. Gas stations ran dry. Travel became difficult. Factories shut down. But as the year dragged on, the recession didn't go away. It lingered and lingered until suddenly something incredible happened. The economy began growing again, but prices kept rising. The US GDP grew by 6.4% in 1974, yet inflation rose by 11.3%. Living standards fell by 4.8%. The economy was recovering, but it wasn't recovering for the average person. If you lived in the city, you might have noticed that your apartment was getting harder to pay for. If you were a business owner, you might have noticed that your factory wasn't making any profit. If you were a wage earner, you might have noticed that your wage didn't stretch as far as it used to. In a way, the world had become unlivable, at least for the people who didn't own assets. This was partly due to the oil crisis. After all, oil was now much more expensive. Transportation costs had gone up. Raw materials were now more costly. Everything was becoming more expensive. But that wasn't the only reason why prices were going up. There was another, pent-up demand. Since the Second World War, consumer demand had been rising fast. People wanted to buy more stuff. But there were shortages of goods and services. Supply chains were struggling to cope with the pace of innovation and the post-war baby boom. Many businesses simply couldn't produce enough to satisfy consumers. That's why there were often waiting lists for popular products. You know, the type of waiting list where you had to wait for months to buy something? This meant that the businesses could hike up their prices. since customers had no option but to buy from them. The oil crisis changed everything. When oil prices spiked, people realized that they didn't need to go around buying stuff. They didn't need to rush out and spend their money. They could save it instead. To make matters worse, people had also saved a lot during the pandemic. They hadn't been able to spend it because of but once the lockdowns ended, they unleashed their pent-up demand onto the economy. They bought lots of stuff, which meant that businesses could put up their prices even further. In fact, the situation got so bad that President Gerald Ford had to introduce wage and price controls. This stabilized inflation in the short run, but it did little to fix the root cause, the imbalance between supply and demand. That being said, the world economy did eventually recover. Oil prices gradually returned to normal. New oil fields were discovered. The North Sea started producing oil. But by that point, the genie was out of the bottle. In fact, the Western world was permanently changed by this event. People had tasted inflation, and they knew that it wouldn't disappear overnight. That's why they demanded indexation, the practice where wages are adjusted according to inflation. This meant that workers had to be paid more and more to maintain their standard of living. Of course, this meant that prices had to go up as well, because businesses had to pay their workers more. And that's why the West has seen such high levels of inflation in the past few decades. It's also why the era of cheap oil came to an end. Before the oil crisis, oil was considered a rather boring commodity. But after the oil crisis, oil became a geopolitical weapon. OPEC showed the world that they could disrupt entire economies. So governments began investing heavily in alternative sources of energy. Solar, wind, and nuclear power became much more popular. Governments also tried to reduce their dependence on fossil fuels. Fuel-efficient cars were introduced. Energy efficiency standards were raised. All of this meant that the oil giants lost their monopoly on energy. Of course, there were other factors at play as well. Environmental concerns were growing. More and more people were talking about climate change. Renewable energy became more appealing. Now, all of this probably would end up happened if OPEC had taught the West a lesson they'd never forget. Ultimately, the oil crisis of 1973 wasn't just an economic shock, it was a wake-up call. It told the West that they weren't invincible. It told them that they couldn't grow forever. It told them that they needed to adapt. And that's exactly what they did. The age of globalization began. Companies started moving their production to Asia. Economies started integrating. The West diversified their energy portfolio. Global supply chains became more resilient, and the world became a more interconnected place. If you enjoyed this video, check out my video on the Great Depression. Thanks for watching.